Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. Tonight's webinar is live Forex market review. So before we get into it, if you could all read through the disclaimer. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to watch, or you can join us in the webinar. I've given you the link there. For those in the webinar, I've got the chat box open and the Q&A box open. Just use either to talk to me. So just give you a moment or two to read through the disclaimer. All right, we'll move along now. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at XAUUSD Securities. And I'm a full-time Forex trader. I've been trading now for more than 15 years in the Forex market, mentoring for more than 10. If you want to contact me, my email's there, duncan.cooper@acy.com. You can connect with me through the week at our website. Go to acy.com, go to the Market News tab, or our YouTube channel at ACY Securities Australia. And if you want to connect with me personally, my Linktree page is there. I'm putting some analysis out at the start of the week that you can get access to if you just head over there, and some free training there as well. So if you want to check out all that, just head over to that page. If you want to get access to my chart layouts and templates, then contact Nathan.bray. They're all for MT4, the ones I'm using in the webinars. I'll put his details in the chat for you. He'll only be too happy to set you up. There you go. Okay. First up, we'll have a look at the news items coming out. Excuse me one moment. All right, so about that. Now, Thursday's today, so 9 p.m. we will be having, that's my time, Queensland time, New South Wales time. We'll be having the UK monetary policy summary, official bank rate votes, and the official bank rate for the UK. Not expecting a change, but you never know. And we'll see what might get said at the time. So it's going to be volatile for pairs versus the pound there. 10:30 p.m. for the US, got the unemployment claims, that could be volatile. And into tomorrow, 4 p.m., we've got the UK retail sales. And then for various countries, we've got the flush manufacturing and services PMI data for the Eurozone at 5:15 for French, 5:30 for Germany, France and Germany. Then at 6:30 for the UK, same data release. And then at 11:45 p.m. for the US, same data release. So through that period, it can get very volatile as those get released, especially if they're not coming in on prints. So I'd be very much aware of that. So today we've got the UK interest rate decision and then the US unemployment claims, 9 p.m. and then 10:30 p.m. That's what we need to watch out for. All right, let's get into the charts now. What we're definitely seeing is, just want to make sure you can see my screen okay. I think you can. This is the dollar index. Been looking, measuring the pullback. And it's not getting down to 6.279% here on the day chart. On most of the pullback, and it is putting in a higher bottom. So it is looking like it's getting support above 105.02, putting in a higher bottom. And are we moving up to come up to test 105.87, which is this old weekly area over here. So it looks like we kind of put in a triple bottom area of support here on the weekly. And are we moving up through a long term, maybe moving above this top? All right, so all the structure there, weekly day charts are all looking very positive. Of course, we have to break above 105.87 to continue, but those are the levels to watch as that price keeps forming. So as that keeps moving up, potentially pairs to the US dollar moving down. And the US to a currency will be moving up, which we're seeing. S&P 500 continues to a new high. That's the 4-hour chart. So day chart's continuing up. There's a minor little swing point here. So, you know, as a trader, I would be looking for a dip if I wanted to be a buyer. I don't want to be buying right at the top of the all-time move. So you could break that into a 4-hour chart, and I was doing this on Tuesday, but we really haven't pulled back. 62 level on last week's high is down here. 62 level at 54.40. So I'd much prefer to see a pullback to this area. But then if I want to engage on a pullback, not at the top of the move. All right. So each to your own if you want to be buying at the top of the move, but I think really you want to wait for a pullback based on the day chart. 62 levels there at 55.40 and some previous 4-hour old tops there that could act as support last week's high. That would be the area to watch. Euro dollar, all right, we've been moving down, putting in a lower top here, higher bottom forming on the index. So it's trying to move below support at the moment at 107.23, getting a bit of a bounce around about the 107 level, but trend is down. So the day chart trend is down, bias is down. Just turn the 4-hour chart back to down now, breaking this low. Now we may come back up for a bounce, so I would be monitoring this little range here intraday for the opportunity to see where I might want to look for a short. Price keeps moving down, keep dragging the fib down. Really, I will just look at the 62 to 79% area of that move down. Price keeps moving down, keep moving the fib down, and then watch for price to come back up and look for the opportunity for price to turn around. I would look in this zone here between 107.37 up to 107.44. Now, at the moment, we're getting a bit of a bounce just ahead of, there's the figure's down here. I don't know what the rest of the day is going to bring, but I would want to be selling some form of rally if I was looking to engage. Now, I don't know what today will bring. If we don't rally today and we break below 107.100, I would look tomorrow for a rally back to 107.100. This 107.23 level, which we're just breaking at the moment, just going back to the day chart, this area here, is if we clearly break below, close below that level today, 107.100, I would look to 107.100 to 107.23 tomorrow to be resistance. At the moment, it really hasn't broken enough below that level to warrant trying to trade against it. All right, I'll be monitoring the 4-hour range that we're moving down within at the moment for a rally back up. Okay. Euro yen is getting very close to the level, to the day chart. It's been failing at, holding at, go to the monthly chart, this major high over here. 169.95. It's been holding there through the course of the last 2 to 3 weeks. We're in the 3rd week. 2 weeks ago, Thursday, Friday held there. Wednesday, Thursday, Friday held there. Last week, Thursday held there. Today's Thursday again. We're coming pretty close to 169.95. And there's a range here, last week's range. Now, are we moving? Are we going to be moving up above 69.95, or are we going to hit it and hold? So that's the area to watch today. It's rather sideways. Dollar yen's moving up, euro dollar's moving down. Whichever one of those two is moving stronger in its direction is going to dictate the direction of this. So most definitely watching, you know, for a failure point today would be up here at 169.95 to 170. What happens up here? At the moment, all week, there was Tuesday's high. Couldn't quite get there. Might not get there today, but up in this area is the area to look for a short if you're looking for a short, because that's where it's been failing for the last 2.5 weeks to 3 weeks. Is it going to fail there to move back down to support? So that's the key area of resistance at the moment to watch, okay? Euro pound. Nothing's changing. What I'm looking for, a move back up to broken weekly monthly support. 84.83 up to 8. So 84.83 up to 84.98. This area here is not getting there at the moment. So just monitoring that area for a rally back to there at the moment. All right, and of course, we've got the interest rate decision for the pound dollar today, to the day chart. We've had a bounce from these three lows. I did close above this 127.09 area here, but we're back below it today. So only had a 38% retracement of last week's decline. Now, if we don't continue up, usually we do move above the 38 level, but if we don't continue up above the 38 level and break the low last week, that's signaling that price action is very weak, because if it has a severe decline like it did last week, and then it can't go to like a 62 or 79% rally, it only goes to 38 and then breaks here, that's telling you that that's very weak, because we've been hardly having a rally. So then I would expect, a strong move for a further leg down. Bit difficult at the moment because we've got the interest rate decision coming out. Later in the day, when that interest rate decision comes out, if that's positive for the pound, I would most definitely look up to 128 and up to 128.60 and the 79% level for an area to short for a lower top to fall. That's assuming we get a rally. If we don't get a rally, this will just potentially drop and you won't be able to get in. So if you're not already in and it drops, you're just going to miss. So you're looking for, how can I maybe get short this pair? But we'll have to wait to see whether the news is user-friendly or not, okay? So I looked further at the range for the opportunity short if it can rally. If it can't, then this high here, 127.09, we may well see, it's moving down to the 4-hour chart, we may see over the next day or two. If we do move down, we may come back to 127.09 to be resistance at some point. It's difficult when we don't know what the interest rate decision is going to do, but if we do start to break below, we may just drop today. We may break below 126.75. So tomorrow you're looking at 126.75 to be resistance. It all depends what the news does today. Market might not do anything because maybe everything comes out as expected and nothing really gets said to the contrary. And then maybe the market may, do next to nothing today. And then you may be looking at 127.09 to be resistance at some point. At the moment, we're just, traded down to 127, broken yesterday's low. So we are forming potential lower top up here on daily, but we'll just have to wait and see what the news brings. All right. I would most definitely, to the 4-hour chart, be looking up here, as I was saying, 128.00 up to 128.60. I know it's 100 pips away, but if the news gets volatile, we could get up there today for sure. And that's really where we failed last week. Heavily failed up there last week. We could come in and form some form of left shoulder here, head, and a right shoulder over here on the right-hand side, if we can get up there, okay? All right, pound yen. Just need to tidy up that line off. Just continuing up with the dollar yen moving up. It's just moving above this 79% level of this drop here. So ultimately at the moment, I was contemplating the idea that this whole area here was maybe going to once more act as resistance. It was doing that on Tuesday, but Wednesday into Thursday have moved above there. So it's looking like we're just continuing the uptrend at the moment. Unless, that's where we had, of course, last week, a very nice sell-off down. So we're getting very much back into the sell-off area of last week. There's this little false break above this high here. So there is the possibility you could look at this level for a short, but the day chart trend is uptrend at the moment, so you are going against the main flow of traffic. I think it's just worth noting that we're at resistance on the 4-hour where we failed at last week. And what happens after the news? If we do hold at that level post news and start to reverse, then we may be failing there. But this is the day chart high that we moved above over here, 200.74. I really think maybe you're looking at some kind of pullback to that area for support. We'll just have to wait and see what the interest rate decision does. So, if we're going to move back down, we have to break below 27.74, and that needs to become resistance. So I don't know whether the market's going to offer that. I think you may be looking for just purely a pullback to this area if we can, and look at this area to be support. To look for an intraday setup to buy, for it to move up towards last week's high, assuming we get a pullback. All right. Just want to look at the 15-minute. But later in the day, this is the low of today, and this is the current high. You could draw in a fib, and you could be looking for a 62% pullback, 79% pullback. 62 is at the figure. So depending what happens after the news, if this all stays relatively bullish formed in terms of price action, look for an opportunity to buy a dip. But we'll have to wait and see what the interest rate decision brings, okay? Now, Aussie yen, at the moment, to the monthly chart, it is trading above this monthly high here from 2013. Was kind of holding. It's only 20 pips above at the moment, and there's more resistance to the left. It's a little bit further up. There's another 150-ish pips to go, I think, to the next level. So all trends are up. We're just in a very historical area of major highs. Okay. Usually at major high points, we will reverse back the other way. So when we're at major low points, we reverse back the other way. Broke this one, but then went back up. Came matched, went back up. It went, this last low area here went up to the high that we're trying to trade above at the moment. So we're at extreme high prices. Last time we were here, we moved all the way down to here. So it wouldn't be any stretch to see this move all the way down to here over time from where we're at right now. But at the moment, all things are pointing north. Monthly, weekly trends are up, and the day trend is clearly up now after breaking above these highs. And the 4-hour just popped an outside upward candle. Now, if you're prepared to buy, you want to be looking now at 105.42 to be support, if it can offer support. This most immediate range form for the day, 79% levels at 105.39, 105.42 is the monthly broken high at the moment. So if you're prepared to engage at such high levels, then that would be the area to look for. You want that area to be support on a pullback. Look at that area for your buy. Trade up off. Personally, I don't like it when it's at such extreme highs, because more often than not, we all false break. And in a day or two, we could well be, 100, 200 pips back down from that high. So, don't forget what happened last week on the pound. Wasn't as major high as we're at the moment, but last week on the pound, if you need a refresher of what happened on the pound last week, we were up here trying to trade above here, getting above this area a little bit here. Everybody's probably thinking we're going north, trying to break above major resistance levels from previous months. And then, of course, it comes crashing back down. What did it move down? About 200 pips. All right. So the same thing could happen on the Aussie yen. Structurally, on the 50-minute chart, everything is still holding. All right. So what side are you wanting to trade the market on? If you're prepared to buy, you want to be looking for a dip, and 105.42 needs to hold a support. If you're waiting for a reversal, whether you're just waiting to see if price can break back below 105.42 and start to show you some bearish structure, maybe on the 4-hour chart, first of all. We're not seeing that at the moment, so that's something to watch over the next couple of days. By the end of today, for example, the day chart at the moment, everything is bullish. But so yesterday we just managed to close above. But by the end of today, if we finish at a loss for the day, closing back below that level, that's going to be the first sign that, okay, we can't hold that high and we could be dealing with a reversal. So at the moment, we don't have that. The other thing as well, as we get to the dollar yen a little bit later, we will be getting closer and closer to intervention prices. So, we're actually above the last intervention high. So getting into areas where we could see an intervention. So it is dangerous, if you're getting long, of course, long is with a trend, but be aware of where price is relative to historical highs. Now, the thing that could stop this from moving up is the Aussie dollar. Aussie dollar, last time I looked, this is the area I put in on Tuesday, the day chart. This area of resistance here, that's the range of last week, 79% levels in the same area, 66.76 is, as I've been saying for a number of weeks now, this is very range bound. There's the general range. Are we failing here to move down, back down to support? Sooner or later, it's going to break out the range one way or the other, but at the moment, potentially, 4-hour charts put in a nice reversal, outside reversal candle to the downside. All these previous 4-hour highs, 1, 2, false break, another high here, more highs here. So what you could be looking for, well, you could look for this to rally back as close as you can to the 79% level and the resistance level to get short, to trade back down to support, and can support break or not. All right, structure on the 15 at the moment, it's still kind of bullish. It did trade to a negative low, lower low, then went up to a higher high. This may, if you're bullish, this is about a 62% retracement here at the moment. So you could be looking to get long here if you're bullish, for the idea that we're going to break it out above here. Or if you're bearish, you could be monitoring that the most recent drop here, 79% levels in here at all these highs. That's at around 66.75. So you could be looking, you could be a buy or a sell on this pair at the moment. You could be buying here to try and move up and through, stop below here. Or if you're bearish, you're waiting for this to come up to this area to sell, stop above here. All right, for nearly 24 hours now, we are holding there. So I don't know if that's telling you anything. We don't want to go above that area, a well-known area of 4-hour daily resistance, where on Tuesday I said that was the area to quite clearly watch. But the analysis I put out on Monday, I said that at the bottom of the range we could hold to move back up to the top of the range. And at the moment, the bottom of the range is held. It's moved back up to the top of the range. And is the top of the range going to hold to move back down? Okay, so you can watch and see, make a decision if you want to trade. All right. New Zealand yen, holding its uptrend. It had a 62% pullback here on the day chart. It's continuing up. We are at, it's difficult this pair because we're, like the Aussie yen, we're very much into historical areas. monthly chart, getting close to this high up here at 97.75. Last time we were there, we traded all the way back down to 4,500 or below 4,500. That was like a 5,200 pip move. All right, so we'll be able to stretch your imagination over the next week to see a failure up here. It can move higher, but all right, so all trends are up. Look at the 4-hour chart. You know, from a buying perspective, really at the moment, I'm just looking at structure. The buying opportunity was here. At the moment, I would need to see this to have the confidence of buying. I would need to see this move up to the 127 extension, then fail. And then, you know, let me just put a line in where that is. I would need to see price to come up to the 127 extension. Like so. And then I would need to draw a fib across that range and monitor then a pullback, 62.79%, to then look in this area to get long to continue the upward move if that's what's going to happen. Where price is right now, I've missed the boat really to get long. I need price to reform itself. So, you know, just have to wait. So I'll just monitor really, I would be monitoring the completion, the upward completion of the move. I could at 97.75 because that's the major high, look for a reversal there if it offers over the next few trading days. But I think from an upward perspective at the moment, you're too high up. You need to look for the next pullback to form. Okay, so that's just a monitoring game at the moment on the New Zealand yen. Well, if it gets right up to that 97.75 and rejects, you could look for a reversal. New Zealand dollar, it is looking to me like it's breaking down from this weekly chart double top. Price rejection for that, if it's a true double top's down at 54.85. Day chart to me is looking a little bit like it's just moved to a lower bottom. This might be as much as it can rally. Today's candle is very negative. And are we putting in a lower top here to try and move through these support levels? This is a very difficult area. So it would be nice if you got short way ahead of there, if you saw the opportunity, so that price can, price can come down and test support to see whether it can break. You don't want to be selling into support. So whether or not price will move up again today, I did say on Tuesday this 79% level was the level to watch of the double top range, to look to get short at that 79% level, stop further up the range. Now at the moment, this is where the sellers are holding the market. So later in the day when the news comes out, if this comes back into that area is approximately 61.47 to 61.39. That area is where sellers are prepared to take the trades at the moment, on the basis that maybe we're topping out here to continue down. So if you can see the opportunity for price to come back up into that area, that's the sell zone at the moment. Quite clearly down here, 60.98 to 60.82 is the buy zone. So if this was to move down, so ideally, can this come back into here, fail? Then can it break down through this zone to continue down? And over next week, do we see that become resistance? Now, if we only move down into this zone and hold and come back above, if you are short from up here, you need to take profit because this is going to hold and move back up. So we need this to break down through to continue the downtrend. And some of the price action at the moment isn't easy, but that is the area to watch once more. All right, there it is on the 15-minute chart. You see it this morning when we had the New Zealand, what was the data released? The GDP from memory. GDP slightly better than expected. Spiked up into that area and then it's moved down away from it ever since. All right, so up near the high of today would be an ideal area to look for a short if we can get back up there. Okay, dollar Canadian. This is the area I outlined for you on Tuesday. Did trade a little bit below. It's a little bit messy at the moment, dollar Canadian. The chart here. It's operating within this high to low range where we've moved to the 79% level, come back up. It's getting some support here at 62. Is it getting support here to have a go at this resistance area up here? I'd look at a different pair at the moment. This is very messy and it's struggling at these highs to the left here as well. It's just very rangy. Struggling with, struggling with a strong direction at the moment. But trying to make some sense, it does look like that's the dominant range. The moment we're at the 62, is that holding to have a go at this high to move up? All right, it's rather messy. That's how I would try to look at it. $137 down here is clear support. So whilst I've got that area in there, I would say at the moment, back to the 15, you want to be looking down at the 137 level is clear support at the moment. So we can revisit 137. What happens down there? Does it once more get support? Can you see that catch a reversal back up? Okay. Dollar franc is trying to move back above 88.92. Now the day chart trend is down. So the question will be today, can we hold at resistance? This is, this is moving up in line with the pairs to the US dollar moving down. So if the pairs to the US dollar keep moving down and the dollar index keeps moving up, then this probably isn't going to hold at 88.92. It's probably coming back up to 89.91. But structurally, though, this is in the downtrend. This has been going a little bit in opposition to the other pairs. And that looks like a new spike. Did we have some news coming out from the Swiss before? We did, yep. We had the interest rate decision where they cut. Unexpected, but that cut is obviously dollar franc positive. All right. Might get an unexpected cut here from the UK. All right, so unexpected cut. So that's obviously dollar franc positive. And then, you're actually, with that dollar franc positivity from the interest rate cut, moving back above 88.92, you really want to start to watch now 88.92 to be support. Okay, so today preferably, you may have to wait a day, is allow this to move up from this point so that then you can watch a nice pullback to this area and then look at this area for support. All right. So that cut, so the Swiss currency at the moment is looking now to one of the lower interest rate pairs. So you would think potentially, so, if we go back to the day chart, you would think under normal terms, the widening of the interest rate differential should mean that dollar franc's very strong, but quite clearly hasn't been. So other things are quite clearly afoot with the fundamental picture of the pairing. But cutting the rate should mean that we see this moving back up the range. All right, so But there's still the question of getting a good strong commitment above 88.92 today, because if we close back below 88.92 today, even though we've had a cut, that's weak for the pair. So really we want to see a nice clear move above 88.92 today, as we're discussing on the 4-hour chart. And then we should be able to see 88.92 become support on a pullback. Okay. So I need price action to develop there and start to maybe form that. Dollar yen, which is moving up to the 79% level at the moment of the intervention decline here that we had back in April. Day chart trend is up. So at the moment, the most immediate trend's up here, but it's worth noting 158.36 is 79% level. And if we start to see some failure around that level for our structure change, we could see a topping out, which, you know, would assist all those other yen pairs which are extreme highs at the moment. So, but if we don't see a structure change, then this can still keep moving up. Difficult, the dollar yen at the moment being, you know, such an intervened currency pair. You know, hands up, who wants to be a buyer on the dollar yen? When we know the Bank of Japan can come in and intervene at any time they want at such high levels. So I think it's fine buying the dollar yen if we have another healthy dip, because once we have a dip, the Bank of Japan will probably have done its thing. But at the moment, we're back up to highs, so it's very difficult. So some pairs, you know, you might just have to wait for the obvious thing to occur. If this dollar yen keeps moving up over the next week, we're not that far away from where we started the intervention, at the 160.13 area. We're only 107 pips away. We can get there in a couple of days for sure. So my game plan would probably is waiting to see what happens at the 79% level, or do we come up to this high point up here? And then do we see a further failure? All right. Just want to see what that Aussie yen's doing. Where is it at? I'm watching for a failure on this pair, especially if that Aussie dollar fails at the highs where it's been failing today. What's the Euro yen? Euro yen's not quite getting up to that 169.95 level yet. All right, let's get into have a look at gold, which is pretty terrible at the moment. Trend though is up. Here's the weekly trend, pulling back within this range and potentially putting in another higher bottom here. So trend is actually holding itself. Day chart though, just putting in a higher bottom. So it's just maybe starting to, it has traded above that high there. So it is just forming a very tight range, slightly in an uptrend just. You can see here, it tried to go into an uptrend here, then dropped. So it's very consolidatory at the moment. It's just holding to the upside and the trend. For our chart, look, it's looking like we might be having a little bit of a 62% dip here at the moment. There's a 62% dip. So just holding to trends and all time frames at the moment. Just breaking to a higher top above this little area here on the 15-minute. So really, you know, on the 15, really that's the entry. Stop below here if you want to trade gold. Right, so the 4-hour trend's just holding up after a dip. Day trends only just moving into an uptrend. Weekly trends in an uptrend. But it's very tough going at the moment, gold. Of course, all these uptrends that are just forming could just break into a very strong trend again. So trends are up, just getting into up right now as we're talking. Okay, so just holding back to the uptrend. But I would say, you know, It's not strong trending though at the moment because that day chart isn't great. I would, if it keeps flip-flopping with news items, then this is support here. This area is support. So that's where that would be a really good area to look for a buy. That's down at 22.95 to 22.86, that area there. All right. Bit of a patience game there at the moment. Gold, it's could be accumulating for the next big move. What I did see on, I'll just tidy this up, I did see on the weekly chart there, often we can get into tight ranges before we explode higher. So we've had a big move up, right? So what we're getting, big move, then we're getting these ranges are getting tighter. And sometimes what we get is a big move, then we pull back, we get these small tight ranges, and then we go boom. So could well be in an accumulation phase here to break strongly higher again. Weekly trend though is most definitely holding itself together. Couldn't put in a lower bottom. All right, so just holding to a day chart trend. For our structures, just having a 62% pullback. As I was saying, breaking above here is just turning the 15-minute back into an uptrend. All right, any questions? So we do have, if you're coming in late, we've got the UK interest rate decision. We won't know what's going to happen until that comes out, obviously. And of course, we've already had the Swiss franc interest rate decision where we've had a cut. Don't think we're going to get a cut, but be interesting to see. If we go back to the news, be interesting to see what the vote is. So this is what they're expecting. So the 2-7, my understanding of this is that 7 members are voting to not raise, 2 are voting, I think 2 are voting to raise. Well, it's definitely 7 are voting not to raise. I should actually just go in here. Don't know whether it will tell us. This could actually be 2 are abstaining, and we don't have any votes to raise at the moment. But in any event, what the 2 and the 0 means is that we'll be looking to see if the 7 are changing their positions to add to this figure or add to that figure. Does anybody know how these votes work? In general terms, I was thinking 2 are voting to raise and 7 are voting not to. But of course, there's also a 0 here, so you can actually have no viewpoint at all when you vote. So I'm not entirely sure of that vote there. Let's have a look at some previous months. All right. So what 8-0 to 1 would mean, I would think 8 have voted to raise interest rates and 1 has voted not to. So I would say 2 means that we're not voting to, we're in the middle. We're neither wanting to raise or lower. All right. In any event, if those 7s decrease and these numbers to the left increase, that's leading more to a cut. Barry, you're saying the definition is on the left. Oh, is it on the left? All right, so the number on the left is to increase. Second number is how many voted to decrease. And the third is how many voted to hold rates. All right. All right, well done. So at the moment, so expecting that 2 are going to vote to decrease and 7 to hold. Okay. So scrub what I said before. So previously, they're expecting previous 027, we're expecting 2 to decrease, 7 to hold at the moment is the vote. All right, that got complicated. I just know that if the 7 on the right hand side was going to get smaller and the one on the left hand side was going to get larger, that was going to be negative for the pound, which was correct. All right. I think any other central bank doesn't give you the votes, so it always gets a little bit confusing when you're getting different data from different central banks. See up here, there's no votes up here for the Swiss. You're just giving you a change rate. All right, so that's going to be coming at 9 p.m. So be aware of that. You never know on the pound, as I was saying before. It's holding at 27 at the moment. We can easily get up today, up to 12800 to 2816. Okay, so you never know what the vote will be, but if the vote is more favorable to just absolutely do nothing, then that would be positive for the pound. And I think some of the data has been coming out lately more positive for the pound as well. So wouldn't put it out of a stretch of the imagination to get back up to 28 today. And then if we start to fail up there, another opportunity to trade down from those highs up there. All right, so with that in mind, I'll leave you with that area to watch. Next week, my next webinar will be on Tuesday. So with that in mind, you just head over to the webinar page. There's the link. So next webinar will be on Tuesday, more analysis. So we'll be able to pick up what the pound's done. And of course, tomorrow we've got all those flash manufacturing and service PMI dollars information coming out. So some of those pairs could go volatile. So we'll see where things are lying after those events on Tuesday. All right, everybody, thanks for joining me today. Have a great trading day. Just be careful of those news items coming out, and I look forward to seeing you next time. Thanks, everybody.